correcting market, shifting market. What the heck does all that mean? You're hearing this terminology in the news and you're wondering, what is a correcting market? What is a shifting market? Well, in today's video, since Colorado Springs, Colorado, El Paso County, where I am a local realtor here, we are going to talk about what is a shifting and correcting market. It's important if you are buying and selling in this market to kind of understand what some of the signals that we're seeing to tell us that we're in a correcting, shifting market. So let's get to it. Hey, Laura Gallant here with Mountain Prairie Living, empowered by ERA Shields, and welcome to my channel where I answer questions about the home buying and selling process. We talk about Colorado Springs and overall market conditions, or just things you need to know about the real estate process. So in today's video, we're talking about the correcting market. So there are some signals that we begin to see in a correcting market. So I'm going to review them and talk to you about them and kind of relate them back to our August 2023 real estate stats that I just went through in my previous video. So these are behaviors or signals that we begin to see in a correcting or shifting market. And it's kind of behaves like a buyer's market, even though we're in a seller's market. So let's get into some of these. The first one is slower price growth. So we will still see some growth in price changing over time, but it's going to be smaller incremental changes. Nothing like the unicorn market where we saw 10, 15, 17, 24% in some markets appreciation year over year. In a shifting, correcting market, those shifts of price or value are going to be smaller and still smaller than the average, but smaller and maybe still forward moving, but just not as huge as we had seen in the previous market. Another signal, increasing inventory. We are definitely seeing inventory begin to slowly creep up. In our current market of El Paso County, we definitely are seeing some inventory, even though we are still lower, about 2.3 to 2.5 months of inventory in El Paso County. Where are you in your market if you're watching this from another market? Comment below because I'd love to hear. Extended days on market, it starts to move up. So last year, 2022, we were 17 days on market in August of 2022. In August of 2023, we are at 29 days on the market. So we definitely shifted quite a bit. Even a month before in July, I think we were 27 days on market. So we are seeing extended days on market. We are seeing properties sit on the market a little bit longer. So that's definitely a signal of a correcting or shifting market. You're going to see fewer bidding wars. Bidding wars that we saw 2 to 3 years ago are not necessarily happening. They are for the cream puffs, those well-conditioned properties that are priced well for the current market. Those will get a couple of bids, but not like the 20, 30 offers we were seeing during that crazy unicorn years or during the pandemic time. Certainly not like that. So we are definitely seeing fewer bidding wars. Buyers have a little bit more leverage to negotiate, and they're asking for things. So we're seeing more seller concessions. You're going to see a lot more price reductions in a shifting, correcting market, probably because sellers are trying to price where they think their home should have been a year later from that crazy market, and it's just not going to happen. So we had 2,420 listings on the market in August of 2023. And 950 of those had a price reduction. So we are definitely experiencing some of this price correction. I just kind of mentioned another signal, which is buyers have more negotiation power. We're seeing seller concessions coming into the offers a lot more often. One, to buy the rate down so they can afford the home that they're trying to purchase. It could be for just overall repairs that need to be done that a seller maybe didn't have the money for until the sale was complete. So the buyer is asking for a price reduction because they're going to need to do those items when they buy the house. You just have a lot more negotiation power in this shifting, correcting market because the seller wants to sell, right? They don't really have to sell. They may want to sell in this type of market because if they didn't want to sell, they would just be sitting on their home and waiting for the market to shift. And guess what? Here's another signal. Contingent offers. We haven't seen contingent offers in a few years. That means, if you're new to the market, it means that you have to sell another house before you can buy this house. And so you can negotiate the two in similar closing times. So say the house that you have to sell to pay for the new house, it would close maybe 2 to 3 days before this house closes, so that the proceeds from this sale can pay for this home. So you'll see a contingent offer. Now it's up to the seller to decide, do I want to take the contingent offer where the house isn't under contract yet? Or maybe I'll take it, it's under contract, but we haven't finished inspection or appraisal. It could be a variety of things that the seller decides to accept. But we are seeing contingent offers in this market, which is actually a normal market, but that's definitely a signal when we weren't having contingent offers to now having contingent offers. And of course, the classic signal, we're seeing a shift in supply and demand. Supply is going up, demand is going down as the interest rates increase. The buyer pool is definitely dropping, and it's just a shift. It's just a market correction. So here's another signal: increased reliance on real estate professionals. If you're watching this video, you're probably trying to find out information. It's so important to work with a real estate professional that's giving you good, up-to-date data. Now, it's also important that you listen to it and you believe it. If you're working with a real estate professional who has been working in the market for several years, they're going to give you valid information. They want to get you to the closing table. They want to help you find the right price. So listening to them tell you what today's market is doing is a really important piece. Here's one of the last signals that obviously is pretty self-explanatory: stabilizing or declining prices. So in August of 2023, our median home price was $480,000. August of 2022, it was also about $480,000. So we're kind of flatline on the median. The average home price has kind of shifted a bit. But as I pointed out in my video of the stats for August of 2023, we still are far above in the average home price than the pandemic. So they're beginning to stabilize, they're beginning to decline a little bit. But as I said in that video, as I'm going to say in this video, look at the big picture. What did you buy it for? What can you sell it for now? That appreciation is going to give you an idea of what you will net out of that sale. And it's probably going to be way larger than the average. The average appreciation rate in El Paso County, Colorado Springs over the last 20 years is 5.9%. So if you're at 6, 7, 8% appreciation year over year from that purchase price to your current list price or sales price, then you're in a good place. It's really important to understand that real estate is local, and this may be different for your market. And in fact, if you're in a different market and you're experiencing something different, I'd love for you to comment below. Let's talk about what's going on around the US. But I know Colorado Springs, Colorado, El Paso County, Colorado, we are definitely in a shifting, correcting market. We have all of these signals telling us that that's what's going on. So if you're buying and selling in this market, I hope this video helped you. It gave you some insights as to what real estate market that you're going to be operating within. But real estate is a long-term investment. And so it's really important to understand that a market is always going to shift. It's going to go up, it's going to go down. And it's not just dependent on the market itself. It's the economy of the United States. It's the interest rates. It's the availability of jobs. I mean, there's so many factors that play into each real estate market. So just being informed, watching this video is such a good thing. I'm so glad you are here. Thank you so much for watching, and I will catch you on the next video.